Season's greetings, Jonathan Camarda, with the last podcast review, whatever you want to call it, of the year. And so, speaking of year, let's just add a rhyme for cheer, as the market, obviously, since the beginning of November, has been heading north. Another pun there with the North Pole. So let's kind of unpack this, see where we see things going. Let's get rolling here. So really, like we talked about way back, the 3 red months from, again, August through October, those last 2 days of October into the first 2 days of November, really got kickstarted, though, with the Fed saying that we're seeing, again, inflationary pressure cooling, although it's still at 4%. They want to get to 2%. But nonetheless, seeing all these indicators cooling, their commentary, of course, kickstarted things, right? Since then, we've seen the 5-year dip well below 5%, right, into the mid to upper threes. And also the dollar, right, commensurate with interest rates versus the pound, the euro, the yen, Canadian dollar, Australian dollar, the krona, whatever other currency of your liking, the dollar has melted, over the last month and a half. So, of course, rates coming down, dollar coming down. We've also seen a softening in commodities, right? And again, in many of your commodities, especially energies and such, coming down as well. Again, looking into foreshadowing into a recessionary environment next year. Now, hard landing, soft landing, we're not getting into that right now because it's still way too out there to really say with any granularity. But a few things that we want to look at. On the fixed income end, obviously we've seen some air come back into that balloon for fixed income after really a rough, 2 years, a year and a half, who are we kidding? And so certainly seen some of that there. And in your strategies, again, you've seen, again, a vacillation away from where we were long interest rates to more long fixed income and more conservative strategies. And then in equities, right? NASDAQ at all-time highs, believe it or not. S&P within a whisker. And now the Russell 2000, the small caps, not so fast, my friend. Russell 2000, 52-week high. We'll take that. Okay, great. And of course, the Russell 2000, remember, when we talk small caps, what's often not looked into as we really peer into the balance sheets and cash flow statements is many of those companies have high debt loads, right? Interest coverage ratios, as they say in CFA land and as such. Those are really under that burden of debt. So as rates come down, releasing some air, right? So what happens? Again, we've had some levitation there. Now, the Russell 2000 really getting back to where it was in the beginning of the year, a little bit above where it was mid-year. We shall see, again, because it is so heavily debt loaded. Imagine riding a bike uphill, all right, for you workout warriors out there with a 100-pound flywheel, all right, versus these large tech companies, what they call the Magnificent Seven, which are just cash flow machines, lower debt, right? Imagine, again, riding downhill with no flywheel weight, right? That's the delineation there on how these work. And, of course, the latter, that's why they've been outperformers this year. So as we now start to drill down, again, as we continue, we see, again, flows in an upward trajectory. Sectors like technologies, real estate, your discretionaries and financials, right, with the rates coming down. Financials, really since the beginning of October, are your leading sectors from that standpoint. Now, as we move into 2024, some room for caution. We don't want to pour that glass of eggnog out. Well, we're going to do a little glass of eggnog half empty. And as such, that volatility is at its 2020 lows, a little complacency. But then when I start to peer into the institutional equity put-to-call ratios, right, shorts versus longs, it's just mid-range, so it's not in a bullish complacent area. Certainly it's out of that bearish territory, out of the red zone for you football fans on your own end, right, on your own end of the field there from late October when the market was going down. So we're kind of midfield, right at that 50-yard line. We shall see from that standpoint. As we start to look at, again, the National American Association of Active Investment Managers, which we watch just from a sideline view, they've been about 80% equities. A lot of, again, aggressive clients. You've been, higher than that. More conservative clients, obviously, it moderates. Now, also with the money markets, a lot of folks that hedge when fixed income wasn't playing its role. Money markets at a plus 5% rate have been attractive. But remember, as rates come down, those money markets, they got to come down with it, just like a balloon with a little air out of it. So we do keep track of that as well. And clients have those discussions with your personal wealth advisors, as I have with my clients, as well as balancing that act of risk reward. Now, the other thing I would say as well, which may put a little floor on rates, is that we don't have as many foreign buyers that are attracted to our fixed income or treasuries. So what happens is that they have to keep yields higher for domestic buyers to jump in that proverbial pool. So keep that in mind as well. Maybe creating a little bit of a kind of a zone there where rates can actually fluctuate even in a recessionary environment. So that'll be an interesting juxtaposition moving forward. With that being said, ho, 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 you probably had enough of me, so it's probably time for this guy to go. Break out this jacket like once a year. So again, enjoy your family, your friends, enjoy the green glide to the north. And in January, a lot of times when that calendar page turns, sometimes they can rip. So we got to be ready for it on that proverbial surfboard, always looking for the dip. So again, from me to you, from us at Camarda Wealth, to your families and loved ones, it is a privilege to serve you. That's what we're thankful for. That's what keeps us warm when it gets cold. But who are we kidding? We're in Florida. How cold can it be, right? People are so thin-skinned down here. Till next time, stay frosty like the snowman, and we'll stay eternally vigilant.